situation. So there really is no need for a separate set of Islamic finance interpretation under the Canadian tax law. The regime is already there, and based on our discussions with the government on certain aspects of it, the federal government is quite supportive of these financing techniques, and we've been doing these for about 4 to 5 years now, so we've had a fair bit of experience. I would say, and by the way, the feedback that we always hear when we have investors, particularly from the Middle East, investing into Canada, there is a perception of high Canadian taxes. It's a perception that's been there for a while, and as we address the issues, I think it's fair to say they're all surprised on how they all could be mitigated. The three areas that we really focus in on in architecting a solution is really determining the appropriate investment vehicle, whether there's a special purpose vehicle that's outside of Canada or one that's inside of Canada. We typically use leverage to reduce Canadian tax impact, and the most common way that we do that is through the use of Sukuk. And the final challenge is through withholding taxes. And interestingly, the withholding taxes tend to be one of the more complicated areas unless you're dealing with sovereign Sukuk, when in fact legislation is in place that actually mitigates a lot of those issues as well. And the real challenge is making sure that with whatever design that you have for a structure, you interlay it with Sharia principles. And I'm going to give you a couple of examples you're going to see in here. Most commonly in these examples, we use a debt instrument, which is the Sukuk, which we've been talking about a lot here, and we use swap instruments. And in the context of real estate, in particular, we use an ijara most commonly. Haven't used it yet in the non-real estate lease context, but that was quite interesting. And we've also used more classic swap instruments in the financial context. And I'm going to give you a couple of examples very quickly on here. So I'm sure you can all follow this very, very closely. And I'm afraid to say that this is actually somewhat simplified, but what this example really here is, this is a context of a private equity real estate situation. I would say to you that investing with Sukuk backed with or asset or the assets are made up of Canadian real estate is the most complicated structure. So this is really the most complicated that you'll get. And really what you're seeing here is investors coming in, and we've used a special foreign entity, which you'll see FORCO there. The jurisdiction that we've used most commonly over the last 5 years has actually been Luxembourg, and interestingly, we actually used the very, very first structure in 2004 when Luxembourg came out. Luxembourg actually caught on to that and now has introduced legislation to really be one of the biggest supporters of Islamic finance, and they just created a set of tax principles. So interestingly, we're quite familiar with it. They've gone in through Luxembourg, and then it's this Luxembourg entity that actually invests in a Canadian entity. And this Canadian entity invests in a real estate fund. So in fact here, we really have two special purpose entities, one being the real estate fund and one being foreign FORCO. And in this example, it's really the foreign special purpose fund. And really what the magic here is, in order to minimize the Canadian taxes, we've used a combination of Sukuk and ijara lease on here. And the fundamental issue that we ran in this situation here is the real estate that was being acquired by the private equity player here was going to be backed by Canadian domestic mortgages, which would have thrown this entire investment vehicle offside. And what this structure really does, it bifurcates the actual real estate and mortgages into a separate entity that's actually controlled by, and I use the example here, ABC Corp. This is actually the private equity player. And on the left-hand side is the actual tenants who are actually leasing the properties. And if you look in the real estate fund itself, there is no conventional debt other than a Sukuk in there. And so what we've really done is created a parallel structure where the offside investments are on the right-hand side, but it flows only up to the private equity player. And the Sharia compliant investments are really on the left-hand side, which in essence have been cleansed from that perspective. In this structure on here, it has been devised that up to a certain point of the return in Canada, defined as somewhere up to about 20%, just a shade under it, the entire structure would be tax-free in Canada. Once they hit beyond 20%, then this structure actually creates Canadian taxation, and is largely due to the interest rate mechanism or the implicit interest rate mechanism on the Sukuk, or the discount on the Sukuk. But this actually, in effect, eliminated completely Canadian taxation.